In this video, I'm going to show you how you can recognize when Bitcoin and other cryptos are getting ready to go back up. Hello and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel we talk about all things crypto. We focus on technical analysis, fundamental analysis, as well as just advancements in the cryptocurrency space. So if you want to be able to know when to buy the bottom and when to sell the top, then go ahead and hit the subscribe button and join the jungle dwellers, join the jungle savages. All right, so I'm going to talk about kind of my approach to understanding when there's going to be a major pivot in the markets, and we're going to focus on Bitcoin, and we're going to talk about a Wyckoff accumulation range. Now, a Wyckoff is it's a really annoying method to try and teach, because people will try and look deep into what they want to see, as opposed to approaching the market objectively to see what they should see. There's a lot of nuance and interpretation to the Wyckoff method, so I'm going to strip away a lot of the bullcrap, and we're going to look really down to the very basic fundamentals of what the Wyckoff method is actually doing. So without any further ado, let's go ahead and dive into it. We're going to take a look at Bitcoin here. So basically what we're looking for is, I'm going to draw a picture of what a price cycle looks like. Now, the fundamentals of the Wyckoff method is understanding the market movements in this kind of formation here, where you have a period of accumulation, you'll have a bull market, a period of distribution, and then into a bear market. So at its core, this is the Wyckoff method. And what we analyze is we analyze the movements in the accumulation to know right at the moment where the momentum is going to re-enter the market, and we can start a bull market. So effectively, what the Wyckoff method is doing is it's trying to show you when a bull market is going to start, and then when the bear market is beginning. So you're not nailing the bottom and you're not nailing the top per se, but you're making all this money in the middle, and that's what we're going to focus on today. So a lot of people out there, they spend a lot of time and energy and frustration analyzing the market to try and find a market bottom. And I'm just going to tell you that that's a real big waste of time. You shouldn't be trying to nail the bottom. You can certainly DCA on panicky days. You know, back here in 2018, 2019, we had a capitulation here. So this was November of 2018, where there was a huge panic in the market. Now, when you get these big panicky events, you know, we had a large panic event right here, a capitulation back here in 2018. We had another one here in 2020 during the market meltdowns of the time, and these were fantastic buying opportunities. If you had cash on the sidelines and you were prepared to deploy capital in those high fear, high stress situations, you know, in hindsight, they turned out to be really good. But that's not the Wyckoff method. The Wyckoff method focuses more on the price pivots and where you can kind of create that transition and capitalize on identifying when the accumulation period is complete and you have enough information to say that it's probably the appropriate time to go long, because it looks like a bull market is about to start. So I'm going to show you how to do that. And we're going to start like we did back here in 2018, right after the capitulation. So typically speaking, a market price cycle will complete at the point of capitulation. So once we have the capitulation, we're going to reach kind of our floor, our seller's climax, as we referred to it in the Wyckoff method. So you'll have a capitulation into the seller's climax. You'll know that the floor is in because we no longer trade below that point, and we have a period of several months of sideways price action where the price action and and what's referred to as spread is tightening. So spread, for those who don't know, usually we're rallying and reacting in markets. If it's fairly even, it's probably either a continuation pattern, which in the context of a downtrend means a breakdown. But if you're trying to break the trend in an accumulation like we did down here, what you're going to want to see is you're going to want to see a contraction of the spread, meaning that the rallies become less and the reactions become less, so that you get this tightening effect until you effectively get to, a flat line. And then that flat line, the market will need to price accordingly. So this formation right here is very typical and what you're looking for an accumulation. So you can really simplify things a lot. Just focus on the volatility, focus on the macro events and the sentiment. At the time, crypto was dead. After it did this, man, crypto was dead. And then what followed that was exactly what we were looking. We started trading sideways where the volatility was reducing until we flatlined. Then when we flatlined, we were met with a decision, a market decision. Okay, so you can flatline, and if the conditions are still poor, your decision that the market will make will be to the downside. But if we are in fact bullish, the decision that the market will make will be a bullish one. Now, the important note to make here on this bullish market decision is that it's going to break above all of the previous rallies of the multi-month accumulation period. So that's really key. Price action really is all you need in a lot of circumstances. A lot of people overcomplicate trading and overcomplicate timing their investments by, looking at too many things, too many indicators that tell them to buy. If they're really bullish and they want to buy, they're going to look at any indicator that tells them to buy. But price action should always be your number one. So we have several highs here of the rallies, 1, 2, 3, 4. And once we got above that, after the contraction of the supply, or the contraction of, sorry, I'm getting very technical. After the candle sizes were shrinking, we got our market decision. And our market decision gave us what's referred to as our SOS, our sign of strength. Once we got that sign of strength, we were off to the races and we had a bull market. Now, this wasn't the final bull market, but this was absolutely a favorable trading environment to be in. And we made a good amount of money here with about a 200% move, which during a multi-year bear market is nothing to shake a stick at. That's a very fantastic move in a multi-year bear market. So, this is a very powerful method. We then got into kind of a reaccumulation. So again, we're making notes of those highs. I'm actually going to go to a tidier drawing here and just make note of some of these highs. We had a high here and then a high here. We fell below it again. And then, the point at which we finally got a very powerful move out of that was the point at which the momentum was shifting and we were ready for a bull market. So when you get these movements where you have a sideways trading environment where with a tightening of spread, we do have to kind of ignore the conditions of this. This was kind of a black swan event at the time, but contraction of the supply and reduction of spread. And then we finally get above the highs. Boom, we had our bull market. And this was the real bull market. This was the one that sucked in a lot of new participants. A lot of people who are probably watching this show came in, anywhere from 2020 to 2021, 2022. And so, those are the real exciting market movements that happen that we can identify once we have these multi-month accumulations. So where does that stand? Where does that leave us right now? Right now, we're still, in my opinion, in the context of a downtrend. So the downtrend is still very much intact. If I remove this channel here, we can really simplify things. Let me actually remove that bear flag so that it's really clean and clear to see. We have these two highs here, and we haven't broken above it yet. So as far as I can say, we don't even have a period of sideways yet. And going back to our model, we do need a period of sideways trading action before we have the advantage, the market edge, to be able to identify that pivot, that sign of strength move outside of that sideways. So as it stands right now, currently, as at the time of recording this video, we don't necessarily have a accumulation range that has formed. What we would be looking for is we would be looking for a break of this downtrend line and then further consolidation. Now, the time of consolidation is really something that can't be predicted. So I can't tell you when the next bull market will come. I can only say that, you know, Bitcoin is a valuable asset that I think the market will want to reprice at a higher price at a future day. But what, you know, the time it takes to trade sideways is not something that we can do with TA. But what we can do is we can identify that point at which it does shift and we get that move above, and we can become a participant at the beginning of the next bull run. You don't have to try and catch the bottom here. You know, if you have big downside events, sure, you can certainly purchase, but you're not purchasing with any conviction that the bottom is truly in. You're just kind of happy with the price, and you're willing to pay, you know, a premium for that. So potentially a premium for that because you don't have confirmation. So basically what we're waiting for here is we need to start confirming that we're trading sideways. How we confirm is we break the downtrend. So once we break the downtrend, we'll begin to trade sideways. What we want to see is a tightening of that spread. If we see a tightening of the spread, we can draw our lines, we can draw our trading range here, and then at that point that we break, it's called a sign of strength for a reason. The market will certainly wake up. You will get a sign of strength move, a small consolidation. The consolidation is the point at which you pick the assets that you're interested in and go long, and then the breakout of that will be the confirmation that it is time for a bull market. So I hope that's helpful. The reason that I'm making this video is not to make predictions. It's not to tell people when things are going to happen. It's more so just to give them the skill set to be able to identify when the shift is occurring so that you're able to be at the beginning of a bull market in any market, any asset, anything, whether it's stocks, whether it's commodities, whether it's Forex, whether it's cryptocurrencies. It does not matter. This works for every single one of them. So I encourage you to learn this method, Wyckoff method, Wyckoff accumulation. Here is a picture of the schematics. It's not going to be a pattern. A lot of people look at this as a pattern. It's not a pattern. It's a series of events that identifies that transition from down to sideways to back up. How long it trades sideways is irrelevant. So if you guys are interested in learning more about the Wyckoff method, I am running a little bit of a sale right now, an additional 20% off to the bear market survivors out there. So if you are a survivor of the 2021-2022 bear market, you get an additional 20% off any package down below. So if you choose the yearly package, that's half off. You get 50% off a year in the Crypto Jungle private Discord. So I encourage you to take a look at that. We have several courses on the Wyckoff method. It's also going to be your backbone support group for any of the clarifications that you need in cryptocurrency, whether it is DeFi, wallets, investing, trading, short-term trading, derivatives, whatever the question is, we do have a specialist there to help assist with any of the information that you would be needing to, level up and prepare for the next bull market. These markets are always cyclical. There's always a bull market, there's always a bear market, and it's up to you to learn to identify that shift. So that is all the time I have for today. I hope you guys enjoyed this content. If you found any value, please leave it a like. Don't forget to subscribe. And if there are any other projects or topics of technical analysis that you would like me to take a look at, please leave them in the comments section down below. And until next time, please trade safe. It is a jungle out there. Peace.